Good morning, everybody. It's Chris here from Serene Education with the 4 majors analysis update for the 4th of October 2011. Hi guys, it's going to be going over the 4 majors as per usual, starting with Euro against US dollar on our CTC strategy template, 6 screens using the count the cash system. Daily, I've drawn all the support and resistance lines. Reason being, I've just looked at the bigger picture because yesterday's tradings held a very significant breakout. Why? Because it's really shown a bearish intent that Euro is or has been in a long part in as many months, and you can see how long it's taken us to get up to the highs that we saw back in late April, early May of this year. And look at the drive, how long it's taken us to get from those consolidation levels now that we've seen right down to where we are currently now. And we are now currently at where we are, and we've broken some significant barriers along the way. Noticeably, the major trend line, it was really driving this. We saw higher swings depicting that. And then back in, if I just zoom in here, early September, we saw late August to early September, we saw this massive breakout of this upside channel, breaking below price swing, and we saw a fall to the institutional moving average. And we thought, well, yes, we need to find some support around there, and we did see slight hesitation because of price support and resistance around that area, just around the 1400 mark. However, massive breakout to the downside, that failed to stick, and then we saw price rally to another support level below us. We've seen some consolidation along the way as people have been, or as the Eurozone countries have been trying to thrash out some sort of deal to try and stem this this negativity at the downside. And then we went to just the past week or so consolidation, where we saw a lot of indecision, price moving between 2 points, support breakouts, consolidations, and that didn't materialize at all. If I just put that in, you can see a clear support area there, for example, another support breakout. And then we saw price fail to break above this prior resistance level here, which happened to be prior support. Price was trading in the support area. Then we had 2 consecutive days of shooting stars, 3 consecutive days of shooting stars almost at a ceiling level, and we saw this bearish engulfing. But yesterday's drive really struck through how bearish the sentiment is on Euro. And we've seen slight consolidation this morning on the Asian going into European session open, but things are not looking rosy at the moment now. And the fact that it's broken this very significant level here, then ultimately it's looking like we are looking favorable for further downside movement. And funny enough, well, it's not funny at all, but the next potential area we can see major area of support is the 1300 mark. So, but also what we've done is I've just plotted a fib. If I zoom out from here right to the top here that we see, and I've just plotted a fib retracement level, and you can see the price has kind of stuck along those areas, consolidated around 38.2 and then the 50. Now we saw a noticeable bounce on the 50 just recently. There we go, 13,400 bounce, and now they break, a major break with a lot of sentiment behind it, a lot of negative momentum of volatility behind it, really pushing it lower, and it's looking like we should be looking at 13,500. That's the 61.8 fib level as our next potential target for this pair. Below that we have ideally one here at the 12,600 mark, then further hesitation here just below the 12,200 mark, and then ultimately back down to 119 that we saw as early as last year June. So negativity is king at the moment, Euro US dollar. So that means if you look at your Euro yen, for example, he's probably going to still see the same thing. So if you're looking to short anything, it would be Euro US dollar. I'd look for potential breakout to the downside from the low of yesterday's candle, for example, on the daily. Look for entry levels. Ultimately 1300 is our next potential target for this pair, and then likewise look at your cross pairs, i.e. Euro against Euro yen, Euro Oz, Euro Kiwi. See if there's anything else over there that can actually also you can actually also trade in the same time. So things are not looking at all great for the CTCs, well extended to the downside. Lots of drive behind this market. See that swing, 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 depicting drive to the downside. And as long as we are trading on that side of the trend line, we should still be looking for negativity as king. Next up is the sterling against US dollar, good old cable. Let's have a look at the daily. Here again, we also saw a gap to the downside yesterday. Markets opened sharply lower. As per the euro yesterday, we saw a slight pullback to close that gap. See, there was the close of yesterday, the open, and then we saw price rally a bit during the course of the morning session. However, came the US session, we saw price continue to the downside, and sure enough, we've seen sterling also falling like its euro counterpart. This morning, slight consolidation as per euro against US dollar. Slight consolidation range at the bottom here, but CTC is well extended to the downside. Notice higher swings. We saw, if I just put it all together here, noticeable ceiling level at 15,650, which happened to be price support, and we've seen price fall since. So if you look at the bigger time frames here, noticeably previous one, major trend, that was the major trend. If I just put this all in, you can see how things have happened dictating that. Then we had a top out well over here, and then we saw highs getting a lot lower, and then we had a breach. We had a slight we had a bounce on the 1600 mark, or consolidation at 1600, and we saw price bounce higher. That failed to materialize or stick, and it traded in the underside of this major trend line, and then we saw a breach of that. We saw a breach of that squeeze pattern, bearish engulfing at that level there, falling through. First target would have been the institutional moving average, second target back to 1600, failed to stick at that level, found a resistance at a price support area, exhaustion candle, and then further selling. And we've been selling ever since as prices really plummeted. If we look at we plot the fib extension or retracement level on that, you can see 23.6 was a very strong support and resistance level, 38.2 very strong support and resistance level, 50%. We're trailing below that area right now. We saw a breach of it, and we saw a pullback. That pullback was at a very significant support and resistance level in the past. Why? Because it was noticed to be a massive support back here in August of September of last year, and yet again in late December and January of this year. And we saw psychologically a bounce there, or bounce occurring at that level, and then we saw price to the upside. How far was that bounce? Well, we can plot a fib retracement, and it only went to 23.6% and failed yet again. A lot of exhaustion wicks at the ceiling level here. This is where I got into my trade just recently on the 28th, and sure enough, we've been bearish since. So ultimately, back to 15,3500 would be our first potential target for this pair, and a break below that, well, sheesh, there's a lot of air between where we are now, the price, strong support and resistance levels, and the lows we saw at 14,200, guys. Slight hesitation in between, but there seems to be a lot more. Well, there's one here at 14,800, but there's a lot of air in between here, guys. Break below that 15,300 mark or 15,3500 mark, and we are definitely seriously in the doing. So look for consolidation today, primarily after those gap lows. But if it fails to materialize and close higher than the highs that we saw yesterday, and ultimately what we're seeing is a consolidation against the major trend. It's just a profit taking move. People are taking their pips, and then we're going to see second extension and third extension, fourth extension lower as the week progresses. Notice there's a lot of news coming out this end of this week. We have non-farm payroll stateside. We also have very, very important. We have all the rates, interest rates news this week. Just having a look today. We had the Australian Bank, Royal Bank, keeping their rates fixed at 4.75%. We have what do we have for Tuesday? Yeah, we got the ECB President Trekker speaking. Sterling, we have construction PMI figures this morning at 9:30 a.m. GMT. Wednesday, we have got service and current account figures coming out. Halifax retail sales, no, sorry, the retail sales are Australian. But what do we have here? We have the ADP non-farm employment change for tomorrow, Wednesday afternoon, for the US market. Thursday is the day, Thursday and Friday are the days to stay away. Those are the days we have the official bank rate for sterling. We also got the MPC rate statements, and then we have at 12:45 p.m. GMT we have the minimum bid rate, which is 1.5% at the moment. Now, are we going to see Eurozone drop that rate figure? Maybe they actually raised the interest rates far too soon. Could we see them dropping them? Previous figure and the forecast figure are exactly the same. They didn't expect a change in those figures. The official bank rate, no change there yet again for us. We've been at this level for some period, and I don't think we're going to see it being raised anytime soon. And then Friday, non-farm payroll. A lot of news out on Friday afternoon, especially for non-farm unemployment rates. The very, very, very strong news out. So a lot of news, which will there again bring a lot of volatility. Okay, got to factor that into your trading, guys. It's great having volatility, but you want to use volatility to your benefit, not to their benefit. Okay, so when you are plotting your trades or your entries, please make sure that you understand that there is news. If there isn't any news, stay away from it and then wait for and trade the news afterwards. Let the market settle down. Let the markets decide which way it's going, and then we trade that decision. Okay, so cable at the moment now consolidating. We had a consolidator. We had a breakout yesterday. Okay, so where to next? You can see we had higher swings going into this consolidation and the breach yesterday on Sunday evening lower, and we have been trading lower. We have a slight consolidation now. Ultimately, we have a break lower, then 15,3500 will be our major intraday target. Why? Because it is a daily strong support and resistance previously. Okay, so that's going to be, if it breaks above the 15,700 mark, then we're ultimately looking for potential for further consolidation to the upside. It'll be bullish because we are trading above, or trading against the major trend. Next up is the US dollar against the Swiss franc, good old Swissy. Let's have a look here. Daily, noticeable, massive change in market sentiment on this particular pair. Ever since we saw the Swiss franc, or the Swiss government, really putting a major spanner in the works by pegging its currency here. They got fed up with the Swiss franc really getting strong, showing up, bang, came out and pegged their currency at 1.20 for euro against the Swiss franc. And ever since then, we've seen the US dollar gain strength across the board, making higher highs, breaking major trends, consolidation ranges, etc. And if you look at its major downside here, trend line blew straight through that with that massive 9% move on that particular day when the news came out, and they didn't give us any warning at all, which really took it right across. Then we saw consolidation above that price support and resistance, found support there and pushed higher towards the institutional moving average, would happen to be around another price support and resistance level at the 89.50 mark. Failed at that first attempt. Shooting stars, pulled back almost a 23.6% move, and then initial second move happened, got above it, then literally found support on prior resistance, and we've been pushing higher ever since. So next potential target for this one, and it's right there thereabouts, is the 92.50 mark, and we've rallied to that in recent days. I've been in this trade since the early session, so this has been really good, forming higher swings, which is fantastic. Long may it last, and we've seen price really rally to the upside. Previous resistance become new support, and we are rallying higher. So 92.50, we need to be trading above that to see further extensions. Otherwise, we could see a consolidation pullback, and that pullback could be to the prior support and resistance here, or the ceiling level. There we go. So if I can stick that in, there we go. You see at 9100, we could see potential pullback, and that'll bring us back to this trend line to the upside. So I'll put that in. So support, consolidation here. potential to come back to 9100, and then we see another kick or another attempt at the high, break above that. Then we are looking for at least another attempt. We have a prior one here at 9500 and above a lot of empty spaces. Slight consolidation there again at 9750, break above that and consolidation above the one. So yeah, a lot of targets to the upside if price continues. CTC is well extended in our favor. So we know that 9250 is a ceiling level, so we put that in our smaller time frames. 9250, there we go. Got to be trading above that to see further progression to the upside. Otherwise, we're trading consolidation at the moment now. I did mention we could see a potential pullback to a prior support and resistance level. That happens to be roughly around the 9150. No, sorry, the 9155 mark. You can see the trend direction for this pair intraday is looking very, very strong to the upside. Moving average well evenly spaced out. Definite pullback occurring here. If you really wanted to, you could do a fib. That was a start of the trend to the upside at the moment now. So we're trading on the 38.2 fib. A lot of support found at this area here. Psychologically, a lot of happens at 38.2 fib areas. Psychologically. So we can take that as our intraday support level. 9190 stays above that. Then ultimately you could see consolidation and then a push higher. And that 9190, which happens to be on a, if I'm not mistaken, yeah, 38.2. Cool, perfect, nice one. So yeah, if we can stay above that, then definite look for another attempt at the high here at 9250 for breakout. For that break below that, then we should be looking at ultimately the trend line for this intraday period to be reattested, which will be price support and resistance here at that level. So look for potential break of 91.9 to see trade down to 91.50 at least, or support to be found here. Nice bullish engulfing or hammer of some sort at this level here to give us a clear indication of support, and we can see further extensions higher. Last pair of the day is the US dollar against the Japanese yen. Let's have a look at the daily. I've plotted some pivot points, support and resistance levels here. Noticeably, you can see the green line is the pivot. You have resistance 1, R1, R2 above, and S1, S2. Got to be trading above these levels. Yesterday's down candle really struck home. Pretty much cancelling this prior resistance. You can see the 50 period moving average in the past has actually worked as a ceiling level, and that's pretty much given us food for thought that we're back below all the moving averages, and we should be looking at ultimately back down here to at least the target chart of your first one, which is S1 support, which is just below the 7640 mark. Sorry, just above 7640. So that'll be our next potential target. Ultimately, break below the lows here, or the second one would be off roughly the 7610. But next potential target would below the support here, S1 would be S2. Ultimately, in between that we have the previous bounces here at 7610. So first target 7640, second target 7610 for this pair. That candle yesterday bearish engulfing, pretty much taken it back to this little uptrend here, and the Asian market and going to the European session this morning has seen a trading at the lower end of that new wick or candle is forming. So if you look at the 4 hour, for example, are we seeing a classic support, or swing high, swing low, breakout, consolidation, and then continuation? We're finding resistance now at this level here. Are we going to see it continue down now because of the fact that it's found resistance? And if that's the case, then we could see that is the start of the move, that is the stop of the move, the potential pullback to the level, and those will be our extensions lower. 100% would be that extension here, so that will be our first target, which takes us back to 7600, which is well extended below the 7610, which happens to be our price strong support and resistance level on our daily time frame. So yeah, that's the case. Below the institution moving average as well. Lower swing, this previous swing still lower than the previous one, so price action still dictating lower. CTC, however, is still blue on this time frame, the 4 hour, but you look at the hourly, the 30-minute, 15-minute, 5-minute, all giving you shorting. Notice 30-minute failing to break above previous support or resistance, which happen to be price support and resistance here. Institution moving average above us, all the moving average above us. You can see quite clearly on a 30-minute chart how that breakout has occurred. Swing high, swing high, swing high, swing high, swing high, swing high, swing low, resistance. Are we going to see continuation lower now because of that? That's it, folks. Hope you have a fantastic trading day. Please ensure that you follow the rules of the CTC if you are using it. Please follow. Please back it up with some sound money management rules. And keep it simple, guys. Put your support resistance lines. Look at the daily trend to see exactly where we are in trading in conjunction with the intraday. The dailies, etc., the weekly charts will dictate what is likely to occur intraday. If you fail to notice that, then you obviously are going to be trading against potential support and resistance level and go nowhere. So have an indication of what the daily is giving you. Look at where we're trading between the daily here and where we're likely to go to, or where it's been, to give you an idea of how much movement is still likely to be seen in that pair, and then you can plot that, or you can put that into, or factor that into your intraday trading. So keep it simple. Most importantly, trade serenely.